Listen, you've got the UK Brexit, you've got global economic tensions, and of course now we've got terror. All of them making a cauldron that spooking the market. Want to go to two market guys, Phil, Flynn, Michael Block, on if investors should continue to seek safe havens. Mike, we've seen gold is rallying, the Treasury yields have dropped dramatically. Is that the way to continue to play this thing, or are we getting to a point where maybe it's getting overdone?
I think it's starting to get overdone. I'm not a buyer yet. I'd be covering some shorts if that's the kind of thing you do. I'm looking at some recent support levels. The problem is right here where the stocks are, Charles, there's a big air pocket down to levels around 2018 in the S&P futures and then below 2000. So that's what has me concerned here. That being said, I'm not pressing shorts here. I think Brexit fear is well overdone. And, for me, that's an issue. The one thing that has me worried is the big moves in oil and the yen. When big moves like that happen, they all cluster together.
Why is the yen? Why is the strong yen? I mean, I think that's been one of the big correlations that no one talks about. Why does that hurt our market so much?
Two things. One, it shows that there's some carry trades unwinding. Bigger reason is psychologically it shows how monetary policy may have lost its efficacy, lost its pop. Back in end of January, the BOJ drastically eased, and the yen, instead of going down, went up in their faces, confused investors, and we saw that big sell-off in February.
Right.
So there's a lot of credibility issues with central banks right now, and that's a big problem here.
Yeah, and of course, the script would have been after yesterday's FOMC meeting, the Dow was supposed to be up by maybe 100 to 200 points. That script has been thrown out the window. On the other side of the equation, gold, Phil, doing very well, even though oil has come down pretty quickly here recently.
It really has. I mean, we've been down. This will be 6 days in a row, Charles. And it really is about Brexit and the Fed. I mean, let's face it, Janet Yellen obviously did not inspire confidence into the global economy with her comments, and other central bank actions around the globe are not either. The bottom line is that this Brexit vote is definitely raising concerns that it will push the globe into a recession, at least in Europe. They say it might be a mild recession. It might not be that big a deal. But I remember a year ago, we were talking about Grexit, Greece. It wasn't going to be a big deal. There's such a small part of the global economy, and if they vote to leave, it's not going to impact the economy. Well, if you go back in history and you go to that vote July 4th a year ago, that's really when the global economy started to unwind. After that vote, Europe went into a recession. Shortly thereafter, you had big problems in China. Maybe they were related, maybe they weren't. But again, it looks like this is going to become a yearly event. And if they do leave, it's not so much, if you look at the hard numbers, it shouldn't be a big deal. Well, it is a big deal because it creates uncertainty, and we don't know what's going to happen next. Who's going to be next to leave? So it really is a big market issue, and that's why we're reacting the way we are today.
I'm going to come back to you on that, Phil, but Mike, I'm almost thinking this is starting to it reminds me of Y2K to a certain degree. It really is. I'm feeling the hype is outstripping. This morning I looked at all the trade data for the UK. Sure. The most recent month was April. The only nation that they had a surplus with was America. If the pound gets hit, that surplus only becomes greater. The flip side of this is if there was even some sort of protest by these other nations, they're not going to stop selling the British citizens goods. So I don't see where, even within the continent, why there's so much fear about this.
Well, again, it's almost like they're looking for an excuse to be upset. Growth is not good. Inflation's not good already. So this causes a problem. A couple of thoughts here. First of all, if this vote goes through, and I actually think it won't go through, I thought that before this terrible story about Joe Cox this morning. I think that now. I think people are bold in the polls, and when push comes to shove, they won't do it. But it's not as if the vote, if they choose to leave, it's not like a wall is going to pop out of the English Channel and a Loch Ness monster is going to emerge from up in Scotland to defend the island. It's not like that. It's going to take time. I predict that if they do get the vote, the House of Commons will do anything they can to obstruct this and to delay it and to push us off. Second thing is, what if this happens? What if it does stifle growth? Europe goes back into technical recession. There's talk of other countries leaving. What do you think Angela Merkel's going to do about that? What do we think Francois Hollande's going to do about that? What do we think Mario Draghi's going to do? They're going to throw money at the problem. And in Merkel's case, it may be significant. We may see the fiscal stimulus that Europe sorely needs to get out of this. Well, that could be the end result of this, which turns into a good thing.
Yeah, there's no argument that she's the one probably who could come to the rescue. Phil, on the commodity side, gold breaking out, looking really good. Some of the other commodities, how should someone, because I know a lot of people who've been wanting to get into gold. Some people put their, have sort of put their toes in the water, if you will. 1,300, maybe more psychological than a real technical resistance point. But that is a number I think some people are looking for as a buy signal.
Absolutely. You know, when we don't talk about it, but gold actually is one of the best performing assets classes this year. You know, it was so beaten up in the beginning of the year because of deflation fears, and now we're up, and it's not like the disinflation fears have gone away. You know, in fact, they're intensifying a little bit, especially what's going on with Europe in global central banks. So, but I agree with your other guest exactly. You know what is going to happen? The only tool they're going to have, they are going to flood this market, you know, with more money. You know, that's the only defense they're going to have against this vote. And ultimately, when they do that, that will be another bullish factor for gold. I really believe that. So I still think this is a risk. It's not going to be the end of the world, but it's going to be enough to slow down a lot of markets and change the way markets are going.
All right, guys. Thank you both very much. Really appreciate it.